Welcome to it. Time to have a look at the markets picture. Asian markets mostly lower on the back of hotter than expected U.S. inflation data. June inflation surging the most in at least its fastest pace in 13 years. Looking at what's happening over the European side, stocks lower as well. And we're also seeing the U.S. stock futures little unchanged as well, weighed down by that inflation figure. We are expecting second quarter earnings from companies such as Bank of America, Citibank, and as well as Delta Airlines. But to talk to us about how all of this is playing out, but particularly in South Africa with a lot happening, we are joined by Michael Traherne from Vestec Asset Management. Michael, thank you so much for your time. Yesterday, we saw retailers, the banks, as well as listed property stocks taking a beating. How are we looking right now?
Yes, Nastasia, yesterday was brutal for anything SA Inc. related, particularly, like you say, the retailers, the financials and the listed property area or property companies, and it makes sense. Today, they bounced back a bit, but they haven't regained all the losses from yesterday. And I think it's the uncertainty around what's going to happen for the rest of the week. And then how big are the insurance claims and how long is it going to take to rebuild everything that's been destroyed? And obviously, during the rebuilding phase, these businesses aren't making money.
Right, let's talk about the rand a little bit. I mean, Bloomberg running an article saying that it's the currency to short right now. Companies such as PIMCO going long on the Brazilian real and Russian ruble. Are you seeing more, or rather anticipating more downside risks for the rand right now if this is the strategy that investors are going for?
Yeah, I think it's a mixture. The rand was the best performing emerging market currency this year in the first 6 months. Obviously, things have changed quite a bit in the last few days. It is worth pointing out that the rand weakness we're seeing at the moment is partially the negative news coming out of the country, but also the dollar has been looking very, very strong against all international currencies, and that's particularly after a higher than expected inflation number yesterday. So the fact that the rand's in the 1470s at the moment, and last month it was in 1370s, I would say still 80% dollar story and only 20% a rand story. Trying to call currencies in the short term, though, I don't have a crystal ball, and I don't think those guys do either. There's so many moving parts in a currency, it's not worth taking a short-term speculative move on them, I don't think.
All right. So you were talking about listed property, and it brings to mind what's going on in the office space, especially following that Nedbank announcement that they're reducing their office exposure, or rather office space. I mean, how do you see this playing out for the property stocks, especially those with a large office exposure, seeing that we're now trying to get around this hybrid working mode?
Yes, the announcement from Nedbank is significant because it's an official policy change. Many managers are still speculating that we'll get back to some sort of normality in the next year or so in terms of working, and that they'll need similar amounts of office space. The announcement from Nedbank that they're not going to have more than 60% of their staff in the office at any one time effectively says that 40% of their office space now needs to be reduced. That's rather significant for the office players, because you probably will find that a lot of other corporates will be following a similar strategy. The likes of Redefine saying that their biggest competitors at the moment in the retail office or in the office space area is actually current landlords that they have trying to sublet space. So it's definitely a transition period for the property companies. And the hope is that they are well capitalized enough that they can transition to the future of work and what property and offices need to look like.
Right. So I mentioned U.S. earnings season. What will you be looking out for as these companies publish their numbers?
Yeah, so there's two things you look out for. You see how well have they done in the second quarter, particularly now that the US and most of the Northern Hemisphere has reached critical numbers in terms of vaccinations. So how well have they done? And then what is management forecasting going forward? And that's probably a bigger number to look out for, is the forecasts going forward than what they've already done. So far, we had big banks reporting yesterday, and they pointing towards a consumer class that has a very pent-up demand to consume. PepsiCo also reported yesterday, and they said that they're seeing a massive surge in restaurants ordering Pepsi drinks, and that just shows that people want to get out, they want to spend money, and that's very good news for company profits in the short term, particularly the international ones.
All right, Michael, thank you so much for your time. Let's leave it there. Of course, we'll be paying attention to what is happening when it comes to South African stocks and bonds. They've been seeing their biggest outflows, which have accelerated since June. Bloomberg estimating that so far this year, $7 billion worth of assets have been dumped by investors. So we'll be keeping an eye on that, whether this is something that could be ongoing or a temporary blimp.